Hi, and welcome to another episode of Claim Matters. Today we're going to be talking about how insurance companies calculate the payments they make when they have a claim to pay. We're going to talk about RCV, ACV, depreciation, and the deductible. Let me talk about RCV and then you pick up ACV. RCV stands for replacement cost value. If I had to go to Lowe's and buy a brand new roof or buy a brand new gutter or buy a brand new window and install it, what would the cost be to replace it? Replacement cost value. And most policies are RCV or replacement cost values. That means the insurance company owes you exactly what is required to replace what was damaged by the storm.
Yes, although, let's put a little caveat in there. We're starting to see that policies sometimes, even in the RCV policy, will have an ACV value on the roof. Let me explain to you what the ACV means. If I have a roof that is 30 years old, or a 30-year warranty on it, and I've had it for 15 years, they're going to give me an actual cash value of half the value to replace that roof.
Because it's used 50% of its life.
Yes, and on contents, you will frequently see, you'll get the ACV value of what that furniture is worth today if you were going to sell it versus what the cost is to replace it. They'll give you that ACV initial money up front, and when you replace it, they'll give you that difference. And ACV typically has more to do with the age of that item, not the condition that it's in. Unless we're talking antiques, and that's a whole different
then it's a different policy.
But for the most part, ACV is the actual cash value. If I had this pen and it was a $300 pen, it's more like a $3 pen.
Yeah, but let's say it was $300 and Mont Blanc for $300.
There you go, because I can afford that. So if I had a $300 pen here and I wanted to sell that on eBay tomorrow, I could probably only get $100. So the actual cash value for that is $100. The replacement cost value, RCV, is $300.
Now, so what is the $200 that's missing? That is the depreciation. The depreciation is how much the insurance company holds back until you've bought the pen. Then they'll pay you the rest. Before Katrina, the insurance company would say, how much is your damage? $100,000. How much is your deductible? $10,000. Here, Mr. Homeowner, is a check for $90,000. Go and get the work done. But what many folks did is they took the check, they put a patch on the roof, they put a down payment on a truck, and the family went off to the Bahamas on insurance company coin. So now what they do is they hold some back, and that's called the depreciation. It's how much they hold back till you've done the job, and then they release it. So here's the
on a replacement cost policy.
Yes, that's really, really important. But sometimes you have an ACV, an actual cash value policy. Then they don't give you the depreciation. They just give you, or look at it like this. If I've got a brand new set of gutters for my house, that 50-foot long gutter and the 12-foot downspout, let's say the brand new cost of that was $80. But now I've had it for 3 years, and so it's probably only worth $60 or $50. So the RCV is $80. The ACV, the current value, is $60. The $30 or $20 is the depreciation. So the depreciation is the amount the insurance company holds back until the work is done on an RCV policy. Then they do release it. They're not keeping it. They're not allowed to keep it on an an RCV policy. So just because they're holding some back doesn't mean you're not going to get it.
And if they're going to give it to you, it's called recoverable depreciation.
Yes.
If it's non-recoverable, you have an ACV. If it's recoverable, you have an RCV. And then the very last thing we're going to talk about is the deductible. So if you have a policy and we have an event like a fire or a theft or a car that comes through the brick veneer into the dining room like I went to the other day, typically your deductible is going to be $500, $1,000, $2,500, depending upon what your policy states. But if you have a named storm, it's going to go up. it's typically going to be 2%, 3%, or 5%. In some
Yes.
commercial policies, you'll see 10%, but that's going to be dependent upon what type of policy you get.
And a lot of that is dependent on where you live. Florida, Alabama, Louisiana, up north sometimes. So a lot of it is going to depend on your policy. Also, always look carefully at your policy. What is my deductible?
Yes, and on pay sheets, this is very confusing. On pay sheets, you'll typically get a check from the insurance company and then maybe another little check and then maybe another little check. Each time you're going to see where the deductible is listed on there. And it looks like you're paying the deductible more than once, but you're not. It's just the way of accounting. But what is the first money out of a claim?
I'm glad you used the word first. The deductible is the first dollar that's paid. It's the first money on a claim, which is why you and I as policyholders are always responsible for the deductible before the insurance company pays. And the reason for that is otherwise people would claim every time a light bulb went out. So we have a deductible so that we cover the initial frivolous expenses. But in a significant claim, we still have to pay the deductible. What about hurricane deductibles, Susan?
So hurricane deductibles are usually much higher. Very frequently you'll see, $7,500 deductible. Well, you've got $6,900 worth of damage, you have a $7,500 deductible. That insurance company doesn't owe you a dime because that's the first amount that's taken out. If you have a $50,000 claim and a $7,500 deductible, quickly, Emil, do the math for me.
$42,250.
Yes. There you go. Then they're going to give you that difference less your deductible. So,
42,500.
I wasn't going to correct you on
Thank you. Well,
what the heck.
Susan, what about hurricane deductibles and the 12-month period?
So if you have, and Louisiana has proven this one, 2 hurricanes in a 12-month period, you're only going to have 1 deductible.
Yes.
13 months, you got 2 deductibles.
There you go.
So keep that in mind as well.
Folks, that's how insurance companies calculate payments. When they have a claim, they have to settle with you.
Thanks for joining us on another episode of
Claim Matters.
Hey, and feel free to hit the subscribe button below so you can watch more.
Also, if you've got questions about a claim that you're having, dial the number below and we'd be delighted to help you.
Thanks again. Bye.